no proof is not enough.
Hey guys, so in this video, we're going to be going over my trades that I took this morning, the setups, the bias from the start to finish, and hopefully this helps someone. If it does, feel free to like the video. It's free and it helps me a lot. So we're going to hop right into it. So first things first, we need to understand what our daily bias is. And if we go to the higher time frames, we're going to very easily start to see what our daily bias is. So we're going to see we ran liquidity on the daily time frame. On a weekly time frame, we're reacting to this weekly order block here. And you might be like, well, where's the fair value gap? If you go to ES, it's much cleaner, and you're going to see from this week's high to this week's low, that creates a fair value gap. And then last week we closed and created liquidity within it. So on a smaller time frame, you're going to see on a 15-minute, last week's lows created relative equal lows within the imbalance. So we aggressively run those lows, see buyers buy it up, see buyers buy it up again, see buyers buy it up again, and then we have New York open, shifts in structure, higher low, and then she takes off coming into highs here. And then we get reaccumulation and trades higher. So that is going to be why our bias is the way it is, and our target for this was going to be previous week highs, which I believe we're sitting just about here. So taking out previous week highs, that is going to be our target for the day. So as long as those aren't taken out, we want to be holding a bullish bias. So that's given on ES, and I traded NQ because this morning it showed a divergence in price. So if you don't know what a SMT divergence is or how to trade it, we'll quickly go over it now. So if we go to ES on a 15-minute and go to NQ on a 15-minute, since these are correlated asset classes, they should be trading the same. And when they trade slightly differently, that tells us something in price. It gives us a little hint as to what the market has planned. So in this example, if we zoom out a little bit, you're going to see we had created this 15-minute low from the overnight session at about 3 in the morning. I believe that's New York time. Traded higher, consolidated, and then now we reach under that low on NQ, and if we go to ES, you're going to see we actually hold above that low. So what this does is it gives us a bullish divergence in price, because when you have a divergence at the lows and we're expecting higher prices, we look for higher prices when that divergence forms. And when you have divergence at the highs and are expecting lower prices, then we expect prices to reverse. So it's the same exact thing on either side of the price. But you can easily see that here with your SMT divergence, which is just smart money technique. So that gives us even more bias to the upside. So understanding that, we can now go to the smaller time frames. Just so you guys know, I trade down from a higher time frame, like I showed you on the weekly, down to a 15-second chart. So that's what we're going to be showing you today. And what I'm really going to encapsulate today is the box setup, because a lot of people are interested in it, and it's a very simple way to look at price. So you can see we ran below that low on NQ and then traded higher. So what really matters here is that we have aggressiveness on the downside and the upside, because what this tells us is that there's people trapped in short positions that are trying to short breakouts into the downside, or even trying to short this high here, short these lows here, whatever it may be. So the box setup is where we look for a balanced range of price that creates a high and creates some lows. And we want to see an aggressive move down with fair value gaps and an aggressive move up with fair value gaps. And the fair value gaps are what tell you if it's aggressive or not. If there's no fair value gaps, there's no box setup. So now we want to mark out these previous lows, draw them out. This is that first long entry. And we can see this is the high, and this acts as your break of structure. So what we want to see again is consolidation, aggressive move down. You can see fair value gaps formed on the way down, and then an aggressive move up, and you can see fair value gaps formed on the way up. And again, that tells us there's people trapped, and the people are trapped under these previous lows here. So buying under those previous lows more often than not is going to result in a positive trade. And the other part of this is when you get that aggression, you want to see displacement coming up above those previous highs. And by displacement, I want to see big candles up, big candle closes above, and I don't want to see a rejection right away. I want to see either consolidation or just kind of a grindy mess, and then some type of second displacement. That's awesome, whatever it may be, but it just needs candle closes above those highs. So now we have our box set up and we have our bias. And what are we going to notice again in price? Prices consolidate sideways, create liquidity in the form of higher lows, And what does that do? That baits retail traders in that are trading trend lines like this. That baits them into the longs, right? Because they're trying to buy these lows looking for a breakout, which more often than not isn't going to work. So what do? We trade our box setup. We get our consolidation sideways. We get an aggressive move lower. And then what do we reach into? The bigger box setup under those previous lows. This is your buy, and your risk gets managed to this low. And now it's like, okay, well, Alex, I missed that long. Well, what did we just set up again? Another box setup. So if I can quickly remove these drawings, we have previous highs, displacement above, closes above, slight consolidation, no really messy or no really good rejections. It's just messy price action, because this is all baiting people to try and buy breakouts of like this flag and put their stops under here, run the stops, and then potentially they're trying to hop back in longs because ran the stops, whatever it may be. What do we want to look for? Well, we had consolidation, aggressive down, aggressive up. Where's our fair value gap? It is sitting right here on the 15-second time frame. And this is going to be your second entry long. And you can see your first take profit, you'd want to see it come above these highs again. And you can also see, again, we get another box setup type move where we get an aggressive move down with fair value gaps and then an aggressive move back up with a fair value gap here, fair value gap here, fair value gap here. And hopefully this is starting to make sense for you guys, because it just repeats over and over. So what do? We get another consolidation, sideways action. We get an aggressive move lower. We get an aggressive move higher, creating fair value gaps. And within that, you now have fair value gap entries long. So looking at this, you're going to see we created this fair value gap. And on a smaller time frame, we broke structure here, created the fair value gap, and then traded right here. And then what else happens? Well, we have the aggressive down, aggressive up. We're breaking structure right here. So you can almost draw it from this area if you'd like, with this being your little balance range. And then we trade lower again into this order block right here. And I will highlight it a little bit better for you guys. These are those down close candles. That's your order block. And you can see again, that same pattern. It's aggressive down, aggressive up, retest, and rocket into the highs. And now if we come and look at the current price action, it got very messy, very quick, but we are creating another area that we kind of balance, right? So this is gonna be an example of price action that isn't very good to trade. So if we take this box setup here, and what I'm seeing is these highs, this initial balance range, and then these lows here, you can see we did get fair value gaps on the downside. On the upside, we didn't really get any. And then what happens when we come and want to see displacement above these highs? We don't even get candle closes above. So you can tell that is not going to work out, right? And now we trade lower into the lows, aggressively down, doesn't leave the fair value gap, it fills down the way down. And then we get aggressive back up, gives you fair value gap entry if you're taking the really small breaks of structure, such as right here, and then now trading higher into these relative equal highs. So this is live price. I'm already out of my trades for the day because we hit my weekly target, which is, or actually we almost hit it. I just was happy with what I had. So this was my trade for the day, $3,615. It's my real account, but hopefully this video was beneficial to you guys. And if it was, please like, please subscribe, turn on notifications. And one more thing is that I'm planning to do a ICT A to Z series, kind of like the one I have on my YouTube channel, except it is going to be streamed every Saturday, sometime around night. I haven't exactly set a date. You will see it on my channel if you subscribe, turn on notifications. I will schedule it, but it will be streamed at night. And if you're there, you will be able to get it. The videos will be privated after the stream. So I suggest you guys turn on notifications and be there for that. It's going to be about a month-long thing, and hopefully it helps you guys out. You can ask me questions, and we're just going to go through all the concepts that I use on a daily basis and kind of not over dilute it like ICT does. Hopefully make it as simple as possible for you guys. So hopefully I see you guys there. And again, hope you guys have a great rest of your day.